Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that a Trump stench is wafting over markets with less than a week to go to the US presidential elections. Recent tight US election polls have sent shivers through financial markets today. The S&P 500 is near a 4-month low. Trying to figure out what drives the stupidity of this Trump support is secondary to the fact of a tight race. Volatility is rising. If the unthinkable happens, everyone will be hurt, especially those voting for Trump. Those that can are making plans, and that affects us directly. Our long-term wholesale rates are rising while those in other countries are falling as fear sets in. Our currency is rising while those for others are falling. What used to be our Achilles heel, our geographic isolation, is now an advantage, and a suddenly large one. It doesn't hurt that our economy is doing very well too. In China, strong September railway freight volumes underpin a resurgence in the Middle Kingdom. China has restarted its old growth engines of investment and export-led growth. October PMI data suggests this trend is set to continue. Both manufacturing PMI measures registered the highest readings since July 2014. However, Chinese policymakers' decisions to double down on investment will only worsen their existing debt problems and store up further problems for the future. According to the BIS, China's ratio of private debt to GDP is already over 209% and growing at an eye-popping rate. For some perspective, the same data for New Zealand shows us at almost 176%, but ours is stable and in a long-term trend of decline. Australia, however, is at 208% and rising quite quickly too. The latest US Fed meeting held their policy rates steady as expected, and they sent new hints that they expect to raise rates in December at their final scheduled meeting of 2016. In New York, the US Treasury 10-year yield is down today by 2 basis points to 1.80%. These markers are signalling risk off. The US benchmark oil price is down again today by more than $1.50 and now just over $45 a barrel, while the Brent benchmark is just under $46.50 a barrel. The sharp drop came as weekly American inventory data revealed the largest weekly increase in crude oil stockpiles in 34 years of data collected by the US Energy Information Agency. This price drop will make Russia and other oil exporters very jittery and unstable. The gold price is higher today, up $17 and now at $1,306 an ounce. The New Zealand dollar is sharply higher this morning, now at 73 US cents. On the cross rates, it's now up to 95.2 Aussie cents and against the euro, 65.7 euro cents. New Zealand TWI is at 76.7. This is a 55-day high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.